इतना जुल्म कर रहे हैं, इतना टैक्स डाल रहे हैं, इतना ज़्यादा बिल हमने कभी सोचा ही नहीं था कि इतना बिल आ जाएगा।
बाद औक़ात तो ये हालात होती है कि बिल देने के लिए पैसे भी नहीं होते और ख़ुदकुशी करने को दिल करता है।
ऐसे ये करे, पैसे ये ले, टैक्स हम भरे, हमारे पे टैक्स इन्होंने वो करना है। अब जो बिल लेने का है खंबे के साथ उसको टांग देंगे।
मेरे पास जो लड़के काम कर रहे हैं ना, उनकी तनख्वाह है 22,000 रुपया। वो कहता 14,000 मेरा बिल आ गया। मैंने कहा फिर मैं क्या करूँ? कहता फिर छुरी लेके आपको कत्ल कर देता हूँ।
Welcome, this is Najma Minhas with GVS Dialogue. I'm joined today by Javed Hassan. He's the former chairman of the Economic Advisory Group and a former investment banker. Javed, thanks for joining me today.
Thanks for having me on.
Javed, inflation is running at over 28% in Pakistan. Petrol prices have been raised to over 300 rupees for the first time in the history of Pakistan. Exchange rates running around 325 rupees in the open market. Interest rates are over 22%. The stock market fell by over 2,500 points last week. On month, it's down 6.6%. What is going on in Pakistan? Are we in the midst of an economic meltdown?
It certainly looks like that. As is often the case in these things, we only know after the events happen. But there is certainly all the indicators you have mentioned look dire. The fact of the matter is that the currency is not 325, it's 334 today. And there seems to be a sort of inexorable decline taking place every day. The gap between the official rate, which is the interbank rate, is 305, and the open market rate today, which is the official open market rate, is 334. Actually, in the market, if you want to do large volumes, which is effectively the gray rate, is probably closer to 340, 343. So you are basically seeing a lack of confidence in the economy reflected in the currency. But you're seeing many other factors. As you've mentioned, inflation is running wild. The inflation is largely linked not to supply shocks, much more to the fact that as the currency keeps declining, so does the imported price of whether it's fuel or other commodities like wheat, sugar, etc. They keep going up, adjusted for the currency parity. So it's dreadful news for the common man, but in present condition, as you might have heard or seen, the fact is that electricity prices were rebased. That has seen a dramatic rise. The August bills were extremely high for even some of the sort of lesser income people. Even our house help got a house bill of something like 20,000 rupees, which is almost half her salary. It's unaffordable, and that is causing quite a lot of distress. I think the real incomes of most people, and this is not simply those who are near or below poverty line, but also middle classes, are eroding very rapidly, and the purchasing power is declining very fast. IMF stated number for economic performance, GDP growth, was minus 0.5. Other economists contend it was closer to -2, -3. People like Saqib Sherani and Hafiz Pasha talk about -3% or negative growth. So all of these signs are ugly. I think I hesitate to use the word meltdown because it seems a bit severe, but we are not in a healthy situation.
Okay, so I want to break down some of those pieces because all the factors you've mentioned are going negatively, right? So let's break them down piece by piece, starting with inflation. Interest rates are being increased to help to contain inflation. Is that going to work in an economy like Pakistan, where dependency on bank fuel money is not very much in the credit fuel money is not part of the culture? It's mostly cash that is spent, right? Cash that people already have in their banks. So how does increasing interest rates, and there's speculation that the state bank might raise it to 30%, which was one of the reasons which was behind the decline in the stock market as well. How will that help Pakistani individuals and businesses by raising interest rates to 30% or beyond where they are right now?
Najma, as you know, inflation in different countries has different drivers. In Pakistan, in many countries, it's aggregate demand, and when you have very high growth and high demand, you tend to have inflationary pressures, not enough labor force. That also causes inflationary pressures where wages go up. That's not the case in Pakistan. There isn't too many jobs available, and there's more than surplus labor. So we can put that aside. So it's not aggregate demand that is necessarily driving up inflation. So in that case, you're absolutely right. It should not have much connection with interest rates. But where does interest rate come into consideration is that you have negative real rates right now, meaning that your nominal inflation, CPI, is around 28%, as you mentioned, and your effective interest rates is around 22%. So you have negative real rates of -6%. Whenever you have that, you have a tendency in the economy to dollarize. People are converting their rupees to dollars, and with an expectation that currencies will go down further. So why you need positive real rates, that's something which IMF has demanded, and it seems very harsh, but what you need is positive real rates. And this should have happened much earlier. If we had positive real rates about a year back, we probably wouldn't have arrived here. But we have had almost continuously negative real rates, ranging from anything from 6% to 10%. And that has been a driver for the currency devaluing all the time. And as the currency devalues, as I've mentioned, you basically have inflationary impact, because virtually, much of your consumer products and energy is imported. So once that happens, it has to be adjusted for the dollar parity price, and you have the automatic linkage between depreciation and inflation. And just this year, the depreciation has been close to about 25% in the last 1 year. Just in the last few months, about 10%. So that you can clearly see where the inflation is coming. This is not a unique case. This happens in other countries too. And that's the reason why we need to have real rates. Now, that has its problems. As you increase interest rates, it has an effect on business cycle. Companies are already struggling to pay their interest payments. But also, you have to remember the government is the largest borrower, so its fiscal deficit goes up even larger. In fact, much of the budget now, something like 50% of the tax revenues goes into interest payments. You can imagine if this interest rates goes up by another 20-30% from here, or effectively goes up by 6%, but in terms of percentage of what nominal value it is, it goes up by another quarter. You'll basically increase your fiscal deficit even more, or payments as a component. The interest component will be even further in terms of whatever revenues generate. So it's a very tight spot. Really, there's no easy solution, but I think avoiding raising interest rates is not one of them. Is certainly not one of the solutions.
Looking at the exchange rate itself, what is driving this devaluation, the exchange rate? When the PTI government took office, it was around 130. When they left office in 2022, it was around 175. By the time the PDM government left, it was around 288, 290 these are all interbank rates. And in the last 2 weeks since interim government has come in, we've seen a further decline of 15 rupees. What is driving this rapid fall in the Pakistani rupee over the last 2 years?
It's a huge burden of repayments that Pakistan has to make. In the next 3 years, there's a debt repayment in schedule, which is about 75 to 80 billion. And this is before we account for any current account deficit. If you imagine the current account deficit is anything between 6 to 10 billion every year, so this 75 billion can easily go up to 90 billion. So you can imagine we need dollars to the tune of about 30 billion every year. And the reserves as things stand today are close to about 7.5 billion. That's what the state bank reserves. And essentially and we run We did for a very brief while in the last few months have current account surpluses, but we're again back to sort of current account deficit. That current account deficit means currency has to be pulled out from the market when the state bank has to go and buy, or importers have to buy from the market. It puts pressure on the currency. There's that factor, and there's also the factor of, as I said, negative real rates. So individuals, businesses, people are dollarizing their currency. They're trying. The safest bet right now, it's almost a one-way bet, is to convert your rupees to dollars.
Okay, so you mentioned the fact that the reason why, one of the major reasons for devaluation is because of the amount of loans that we are repaying back on a yearly basis. In that case, when we hear government ministers, and even recently the army chief made a statement to the effect that $100 billion, they're working on bringing in $100 billion into Pakistan under the SIFC. And we'll come to the SIFC in a minute, but if we look at the $100 billion, if we take more loans, how is that going to resolve the situation, especially the devaluation that because you explained that this is all a function of the loans that we have to keep repaying, and we're just not making enough money by ourselves to repay the loans otherwise.
Well, I hope, and from what I understand, and that's hopefully is the intention, that it's not any further loans. These are equity investments in projects. And this is basically more cash coming in terms of dollars into the country. That's what one understands. But really, there's so far very little actually that has materialized. There's been a lot of talk about it over the last 3 to 6 months, but so far nothing has materialized. And until we actually see dollar investments happening in some of the projects which have been talked about, minerals and agriculture, one has to be a bit careful as to really take this as a salvation to the problems. So there's a lot of talk about it, but really, as far as things stand, there's no real evidence of this flow coming in. And we have to understand that even if there's equity investment, one has to see at what kind of cost is it coming in terms of dividends that have to be paid out. Would there be any guaranteed returns, as in the past we have had in the case where CPEC projects, especially the IPP projects, which is in some of them are a burden, which are costing anything between 2.5 billion to 3 billion of repayments every year in terms of the capacity charges. So it's not a easy salvation, and really, even if that money comes in, and I can't imagine in one big chunk 75 billion or 100 billion will come in. Even if say 2-3 billion comes in, a lot of it will be used up for project development, which will mean even more imports. So it will not necessarily always help the balance of payments situation. The balance of payment situation will be helped not only then until when we can start exporting, and when we improve our productivity, when we improve our capabilities. But I think that is also a long-term solution. Fundamentally, we are in a situation, and this is something which the group you mentioned, Economic Advisory Group, has been talking about, and we have mentioned what we need is, and I feel at some point the country's policymakers need to think about it. Do we need to have debt restructuring? Essentially, we have an unsustainable level of debt. IMF believes we are just close to the brink in terms of sustainability, but many of us think that it is not sustainable. And having this burden of debt overhanging on us also deters investments. If you see, despite the standby arrangement that has come from IMF, and that was just a few months back, if you remember, and there was a lot of excitement, rupee saw appreciation, and everyone thought, hallelujah, things have been solved. And very briefly, for a few weeks, everyone was in the afterglow of SBA. But again, we start seeing rupee devaluing. Again, the inflation start going up, and everything is now back to square one, where the mood and optimism has disappeared. And that comes from the fact that this overhang of debt needs to be addressed. And no short-term solution is really viable unless this overhang of debt is is addressed.
Debt restructuring requires people holding the debt to agree to that, right? So why would they do that? Traditionally, China has refused to do it, and they hold a certain significant percentage of our debt. And then there's various multilateral agencies and other bilateral creditors that we have. What is it that we're going to offer? Why would they agree to debt restructuring?
I think at some point when countries actually announce debt restructuring, your creditors also change their tune. Because when you actually sort of put a line under it and said, well, it's not possible for us to go further, then everyone comes on board and starts to think very carefully, how do we make this happen? Because nobody really wants their debt to be written off. And nobody would really want to see Pakistan to go under either. So I think we saw this in the case of Sri Lanka. It went through a very difficult period. But in many ways, Pakistan is going through that difficult period in a prolonged manner, despite not having defaulted. You're seeing continuous devaluation, inflation, virtually no growth, high levels of unemployment, increased levels of poverty. So we probably are not seeing this sort of catastrophic fall of Sri Lanka, but we are seeing many of these things in much more slow motion. So it might be a thought that we might want to, while we are still ahead, we want to have some kind of debt moratorium and then get the creditors on board on the same table and start the process of debt restructuring. It will be a painful process. Really, Pakistan is in a situation, as I keep saying, and it seems repetitive, there are no easy solutions. It will have to go through the hard decisions. I pray to God that 75 billion just lands and it all comes into the state bank account. But somehow I'm skeptical about that.
So the 6 months that apparently the army chief referred to in his conversations in the last couple of days with over 100 businessmen in Karachi and Lahore, do those 6 months seem feasible to you for putting Pakistan back on track?
Look, I mean, it doesn't matter what I think or what you think. If everyone believed that in 6 months, if not 75 billion, even 10 billion were coming in, today the currency value would have rapidly appreciated. It was on Friday something like 325. Today it's 334. So the markets have seemed not to have accepted the view that there's a huge amount of money coming in. Markets tend to be forward-looking. They tend to discount good news that is coming as much as they discount bad news. So the credibility of it, to a certain extent, rather than me or you suggesting, really we have to really rely on the market. And the market seems not to have sort of taken it on board. And you saw continual decline in the open markets in terms of the currency. You saw a small rebound in the stock market, but that also was really less than 1%, 350 points. Nothing to really get excited, having seen, as you said last week, 2,500 points decline. I keep insisting, I hope the Chief of Army Staff is correct. I hope there's huge amounts of money and the Gulf countries are rushing in with their investments. But there's not much sign from the Gulf countries themselves that they're rushing in. We keep saying so, but I think the markets would like to see much more evidence of that.
Do you think they're waiting for a fire sale of Pakistani assets?
Well, I hope not. I mean, if it's going to be a fire sale, and we have seen that in other countries like Russia, that means you're basically giving at your assets, which would generate long-term exports and dividends. You're giving them away for something at which you'll not be earning that yourselves in the future. So really, fire sale is probably probably a worse idea than debt restructuring. We seem to have got ourselves into a mindset where we think just about everything else, and even if we have to sell our shirts off our back, is better than having to have debt restructuring. There is no stigma in debt restructuring, but many countries, Zambia has just gone through it, Sri Lanka has gone through it, and there has been extraordinary conditions around the world where you've had to relook at unsustainability of your debt profile, and gone through it. But we seem to be more willing to do all sorts of other options, and not that. I am personally very skeptical about fire sales. I think in the long term it does a great deal of harm in terms of the country's overall investment environment. What it does is makes you a destination where normal investment for looking for efficiencies in the market, productivity in terms of manpower, that's not the reason why investment comes in. It comes in just to basically asset strip. You've been in the investment banking game. Asset stripping is never good for a company.
It's never good for a country either. But do you see that wisdom in our governing classes? A penny today seems to be worth a lot more than a penny over the course of time.
Well, I'm reticent to comment, but evidence so far seems to suggest that that kind of wisdom that you're suggesting doesn't seem to have sort of percolated down. We seem to be looking for very short-term solutions. Everyone wants a sort of magic wand which takes all the problems away. And what is interesting is many of the policymakers talk, but the markets don't seem to be convinced. And I keep saying that this continual devaluation, this continual pressure on your economy, slowdown in economy, businesses closing down, are telling you that the market is not convinced by the policy actions that various regimes have taken, including what we have right now.
Okay, so on the debt restructuring, one of the major issues, we're seeing electricity protests across the country. One of the major issues, of course, is the capacity payments. Why are we not defaulting and doing the same option that you're giving for the country at a countrywide level?
Well, that's an excellent question, Najma, and I wish more people would ask that. Because actually, if you have debt restructuring, it also enables you to restructuring your capacity payments. You cannot go, the capacity payments to the IPPs have a sovereign guarantee. All of these IPP contracts come with a sovereign guarantee at many layers, at many points. So you can't default on any of them without invoking overall sovereign default. So frankly speaking, if you get to that stage, you might as well do a debt moratorium on all the debt and bring it all. And I think some of the, I can't speak for the creditors, but this has been alluded that if you're going to do this, you need to look at your other debt as well. You can't just exclusively do it just for the IPPs. And that is where the IPP creditors are not willing to sort of come into negotiations. They're saying, if you're going to do this, it has to be across the board. And I can see that, because why should one particular creditor give you the benefit when other creditors are not doing so? They would like all the including domestic creditors. So there's not only international or external debt that would need to be looked into, but also the domestic debt, which is very, very expensive right now, as we know, at 22%.
Right. Javed, thank you so much for your time today.
Not at all, pleasure. Great to have you on this program.